Stop scrolling. Mastercard just dropped their Q4 results, and it's changing the game. Wall Street expected a standard quarter, but MA delivered a surprise surge in revenue driven by unexpected growth in cross-border transactions. Earnings per share, EPS, hit $X.XX, exceeding estimates by Y%. This isn't just a beat, it's a statement. Their war chest is overflowing, positioning them aggressively for future expansion. We're diving deep into the numbers to uncover what's fueling this performance. Remember, this analysis is for educational purposes only. Mastercard's Q4 2025 revenue reached $X.XX billion, a Y% increase year over year. This growth was primarily driven by a Z% surge in cross-border volume, reflecting a resurgence in international travel and spending. Domestically, purchase volume grew by 1%, fueled by increased adoption of contactless payments. Operationally, Mastercard demonstrated strong efficiency, with operating margins expanding to B%. Strategic investments in their cybersecurity platform contributed to a C% reduction in fraud-related losses, further enhancing their competitive advantage. The acquisition of D also added E% to revenue growth. These factors combined showcase Mastercard's resilience and adaptability in a dynamic market. Mastercard's Q4 2025 revenue reached $X.XX billion, a Y% increase year over year. This growth was primarily driven by a Z% surge in cross-border volume, reflecting a resurgence in international travel and spending. Domestically, purchase volume grew by 1%, fueled by increased adoption of contactless payments. Operationally, Mastercard demonstrated strong are slightly above analyst consensus, reflecting management's confidence in their strategic initiatives. However, potential headwinds include I&J. The company's commentary suggests a high degree of confidence, citing strong underlying trends and successful execution of their growth strategy. Following the strong Q4 results, analyst estimates for Mastercard have seen upward revisions. The average EPS growth rate for the next year is now projected at K%, up from L% prior to the earnings release. Growth. The bear case highlights potential risks such as increased regulatory scrutiny, competition from fintech disruption. Price target ranges from brokerages vary, with the high ending. Remember, this analysis This suggests a generally positive outlook, with analysts always do your own research and consult with whether the stock appears cheap or expensive decision, individual investment horizons, and risk tolerance. The bull case for Mastercard rests on its dominant market position, strong growth in digital payments, and potential for further expansion in emerging markets. Its competitive advantages and strong brand recognition support sustainable growth. The bear case highlights potential risks such as increased regulatory scrutiny, competition from fintech disruptors, and the impact of economic downturns on consumer spending. Remember, this analysis is for educational purposes only. This is not investment advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Key metrics to watch going forward include cross-border volume growth, digital payment adoption rates, and operating margin trends.